Hey everybody, Dave here, Hidden Freedom Investing, and today we're going to go over a different type of video that I've never really done before. So I'm not going to show my face in this video. If you want to know what I look like, you don't know what I look like, look at a different video where I show my face. But in this video, we'll keep it kind of short by just kind of getting into the business here. So, yesterday, today is Friday, by the way, March 20th. I record this on Friday, so markets closed, and yesterday was the first day of spring, and this is the spring that we got here. And it was 65 degrees yesterday, or the day before the snow, and then the next day we got 16 degrees, and we got a big old, I would call it like a little mini blizzard. So let's go ahead and dig into the video. This video is going to be on naked puts and kind of the whole story on this saga, and what I'm going to even do about it and all that. So here we're looking at basically a screenshot of my account from back on February. This is right around the 25th or so of February. And you can see here that I have 3 naked puts that I got into, one on Apple, one on Facebook, one on Microsoft. And there's the strikes there, 295, 250, and 170. And now at the time, so I got into these puts, these naked put options on February 21st. Okay, and that was before we had any market decline at all. We were sitting up near 52-week highs, as a matter of fact. So, we had no idea what was going to be even happening down the road. But as you can see, looking at this here, I made basically $50 a piece by selling those naked puts. So looking at these puts, the green here tells you that they are in the money, and they're kind of, I wouldn't say they're deep in the money, but the price went from $50 to $4, from 55 cents to $6.65, and 52 cents to $9 on the Apple. So this is after we had 4 days of the decline, and it looks like we're in the money, so I'm in jeopardy of having them actually assigned to me. Now one of them did go back to being out of the money, but that's at that point the option price was still too expensive. Why would I want to buy it back and take a loss of $500, $600? So it's easy to look back and say, hey, it's like you probably should have just bought that back and took a small loss, a couple $100 loss on it, and then kind of went forward. But who would have known that we would have had the biggest decline in a week that we've ever seen in the history of the market, since 1987. So, and here it is, we're a month later. So this is how I got into those particular puts there. I did all 3 at the same time, which is not something I normally do. I normally just do one stock at a time, one option contract per week. But I figured, why not just make $150 that week, and it's easy money. I got super killer, strike prices. If you go back and look at these stock prices on February 21st, these strikes here were pretty low compared to where the prices of the stocks actually were at that time. So I felt like those are some pretty good prices there. Even if the market pulled back and had a small little pullback, I'm like, all right, well, the worst case scenario, get these stocks at a good price. And well, technically I did. 170 for Microsoft is great. Even Facebook at 202.50 was a great price, and Apple at 295 was a killer price. It's trading up, 320, 330, right? So it is what it is. You can almost blame me for tanking the market at this point, having a 30% correction because I got into these puts. So shame on me. Here we are looking at a snapshot from March 9th. And those puts, by the way, they expired on February 28th. And we'll go ahead and look back at the market to show you what kind of got me stuck in those. But March 9th here is a snapshot of it, and there's those stocks. I got signed all 3 of them all at the same time, right over that weekend, the expiration of the 28th of February. And there's the strikes that I had, and I got to sign those stocks. So that pretty much, took my account and used up all the funds that I had in it to purchase those stocks. So at this point, am I right? Let's go ahead and sell some covered calls now, because the prices of the stock are still pretty good, right? So Microsoft and all that was 150. So my strike is 170. It's still pretty good price. I'm only 8% down that I can actually sell a 1 week out call and make a pretty decent amount of money on it still. So in Apple, because it's a little bit more expensive stock, I can make quite a bit of money on that one. I think one of the weeks I sold a covered call, I made over $700 on it. So I'm like, this strategy is working. It's not too bad. So on up days, we'll go ahead and sell covered calls. And at some point, we're going to get lucky and the stock is just going to continue to go up. It'll be in the money and it'll get called away from me. So that's the strategy going forward. So, this is March 9th. So, we had a pretty big decline, but we're not sold off, 30% yet. So, let's go ahead and take a look at the next snapshot from today, which is March 20th. So, and see where things are at. So here we are looking at March 20th. This is actually logged into Interactive Brokers. This is live right now on Friday, March 20th, after the market's closed. So we've had a pretty big down day. And we'll talk about that in a little minute here. But so here is the current snapshot of those 3 positions that I have that I got assigned from those naked puts. And, look at this. I'm down 26% on Facebook, 22% on Apple, and 19% on Microsoft. I did not sell any calls this week at all because they're just too far out of the money to make really any money on them. I probably could have made about 50, 60 bucks for the next week, but I just felt like I wanted to wait for a bigger up day, like a 5 to 10% up day, and then sell them that day because you're going to get more money out of them. So the other option is I could go 2 weeks out or a month out and get paid quite a bit more money to sell them. But with the market the way it is, I kind of want to just go week by week right now, just because if it gets up into the money, I can get rid of the stock and then start the whole process over again. So, I'm down over $15,000 in just a matter of basically a little bit less than a month. So, that's what happens with a 30% decline in the market. And actually, I think we're even more than that now. That doesn't happen, but every 10 years or so, right? Every, 5 to 10 years. So you're probably thinking, Dave, you're an idiot. What are you getting into these naked puts for? You took a small loss on those naked puts and not been down $15,000. Well, for 9 months I've been selling naked puts and making quite a bit of money doing it and not having a decline in a bull market. So what are you going to do? This is just the way the market is. And guess what? Sometimes you don't get lucky and you have a 30% correction. That's just the nature of the game. So at this point, we are going to turn some lemons into some lemonade over a period of time. Even if it takes a year, we will still make money doing that. So my strategy going forward is to either wait for the market to come up enough where I can get a decent amount of money to sell some naked calls. I keep saying naked calls, covered calls, and we'll play it week by week. So when these get closer to earnings, I think the premiums will go up a little bit. I can get a little bit more money out of them. My second backup strategy is if these decline just too much, if we have another leg down the market, which looks like we might get another leg down, what I'll probably end up doing is sticking more money in this account, another maybe 20 or 30 grand, and then buying one of these stocks, probably the most resilient one. Haven't decided which one yet. And one I feel like it's not going to decline too much, pays a pretty good dividend. I'll average down with another 100 shares, and that'll bring my average down significantly where I could sell covered calls with that average price, strike price at that point. I'll be able to make a killer amount of money on the covered calls, has a more likelihood of actually becoming in the money, which will get those shares called away and then deposit that, how much ever money it is. If it was on Apple or something, it'd be like, 44 grand or something like that. So, so I think that's my strategy going forward. If I need to, I'll put more money in this account, and I pretty much drain this account to put it into the dividend portfolio. So going forward, we'll play it by ear for now and, kind of give it another month or so and see what happens. But if these decline too much, and I think the strategy going forward is just deposit more money, average down, and we'll play that route. So let's go ahead and look at the market real quick here. What happened today? So today is Friday, and that's the candle for today. So we had kind of a pretty big up day, and then it sold off pretty much near the end of the day. oil and all that kind of had a decline. So that candle right here is just a bad candle. So but looking back here, this is basically February 21st, and then there's February 21st. There's February 21st, and there's February 20th. So that was a Friday, and that was a Thursday. I got into those naked puts right around this time frame before we had this big old weekly decline that was humongous at that point. So I did not want to take the big loss on buying all those puts back. So I just end up keeping them. I figured, you know what, we'll just take the stock. The stocks are at a good price. They're super resilient companies, the best in the world. And I feel very comfortable holding 100 shares of each one of those companies. And, I would have never expected we would have had a decline like that, let alone even had these legs down here either. So it is what it is. So like I said, we'll take these lemons and turn into lemonade. So let's go ahead and take a look real quick here at the actual activity statement. So here we are looking at the activity statement. So last year, for the last 9 months or so, I've been selling naked puts, making a lot of money doing that. And, on Boeing, I did quite a bit this year. So this statement is really just for this year to date. And we're not looking at last year at all, but last year for about 6 months, that's all I did. So, and here is year to date. So this is basically all of, January, February, and part of March. So I'm up $1,800 and $1,850. Actually, it should be about $2,000 because for some reason this is not showing the actual naked put money here over here, which it should be. So I did a lot of Boeings, which I've talked about. And you can see the strikes kind of dropping there as the stock was dropping, but I had been lucky enough that every time I went in the money, it just came up, it came back up, back to being out of the money. So I just, pocketed the money and didn't have to take the shares. So did quite a few puts on Apple over the time, never got assigned. And then, the same thing on Microsoft as well. And finally got assigned on the 295 put there. So there's Tesla. I did one on Tesla at the 580, and you're probably thinking back, wow, 580, that's expensive. Well, it was at 900, so I only made $3 on that one. I don't remember the reason why I got out of it. I just didn't feel good about it. So when it came back up into the money, I just bought it back. So and there is all the Facebooks. So there's a huge one right there. Made $526 just that 1 week selling covered call. That was when, after the first week, I got assigned those stocks and was able to sell a covered call at $295. And, I think Apple was very close to being next to $295. Actually, I think even came up to being in the money, but because, those basically calls become more expensive as the stock goes up, I didn't want to buy it back. So I just said, screw it, who cares? We'll just let it either, the chips fall where they may. And since it didn't end up being in the money at expiration, I collected that $526 and the stock remained in my portfolio. So if you have any questions about this, I will be doing updates on this strategy every once in a while. If something big changes, if I add more money to the account and I sell covered calls and they end up getting called away, then we're successful, and from that point we'll have more money in the account. I'll buy more shares of the next position, average down, and start the whole process over again until all three are gone out of my portfolio. And then we'll start selling covered calls again, but at much lower prices than where they are today. So with that, I hope everybody survived this week. It's been a really killer week. I do think that the market is going to be going lower. I do think we're going to go into recession. I hate saying that, but it is what it is, and I've been saying that a lot. So just remain strong. Go ahead and just kind of ease your way into the market. Don't just buy all in 1 week. Don't buy all in 1 day. And kind of just prepare for another 10 to 20% down. And who knows? I don't think we're going to be more down than that, but we could. So let's go ahead and close the video. Go ahead and please like and subscribe. And if you're not a subscriber, go ahead and please subscribe. I really appreciate it. So we'll see you in the next video. Thanks for watching.